Center for Economic Development and Transformation, Duma Gqubule. Great to have you with us.
How are you?
Duma. Yeah. First, let's start with, there's a lot of debate in South Africa whether we should care what the rating agencies think. What do you think of the rating agencies and their importance for us?
Okay, the first thing I want to say is that 11 years ago, during the global financial crisis, these rating agencies, for context, they were exposed as being incompetent, corrupt, because they gave AAA ratings, the highest possible rating, to those toxic financial instruments, weapons of mass financial destruction that caused havoc in the world economy. And they were doing that because they were getting paid by these banks, and they were giving them AAA ratings.
So it wasn't just incompetence, it was real
also corruption. Yes, and they had to pay massive fines to settle those cases that were brought in the US. Now, the second thing I say is that I think we put too much attention on what the rating agencies say. Now, for the first thing I have to say is that what the rating agencies say we must do is actually going to make our situation worse. And then the second thing I want to say is that we are focusing on the wrong thing. Our country hasn't got a high debt to GDP ratio by international standards, but we will have, so the rating agencies are not exactly saying that we have a debt crisis, but they're saying we will have a debt crisis if our economy doesn't grow. So in the ratio of debt to GDP, we have to focus on growing the bottom part of that equation, the GDP. And so what I'm seeing right now in South Africa is that we haven't got a plan to grow our economy, because the main reason for the rising debt to GDP ratio is that our cost of capital is way higher than the growth rate.
Okay, so I want to talk about debt, but just staying on the rating agencies. So you're saying, they don't really know what they're doing. But can we agree that if they had downgraded us, there is a significant impact in terms of our ability to borrow money on the international market?
No, Francis, that's the thing I forgot to say, is that we are already rated junk. We've been rated. So what I have to say is that what the rating agencies do, if you actually read their reports, they're very flimsy and they're loaded with dubious ideological assumptions. So it's like a 4-page document, and anybody can actually take a view on a country's debt like a first-year economics student. It doesn't require any specialized expertise to take a view on a country. So people in the markets are every day taking views on countries' debt, from Venezuela to South Africa to Zimbabwe, without the ratings report. That's the first thing. Now, the second thing is that these ratings, what happens so we have been rated junk for 3 years. We've got so we are already rated junk. So what happens when you're rated? The research has shown, one of the Alexander Forbes, Bloomberg did research, the IMF did research. So the cost of the event of a downgrade has already been priced into our bonds. So what happens after a downgrade is that the countries improve in terms of the cost of capital and the currency. So the opposite of what you would expect, what everybody has been repeating every day.
So I have to ask you about this, because this is where you're not standing with many economists that I've spoken to, who are concerned specifically about, I think the Citigroup has a bond board where global investors can invest in South Africa, basically lend our government money, but you're not allowed to be on that board if you're rated junk across all 3 rating agencies. So they are saying that Moody's keeping us above junk is basically keeping us on that board for now.
Yes, of course, So there will be an outflow of capital, but I think there'll be a reaction for a week, maximum 2 weeks, and then I think it'll be back to normal on the markets, because the exit that they talk, let me give you the facts. So their foreigners is about 1/3 of our bond market. So the exit, we're not sure how much funds will be affected by the exit. So some people are talking 100 billion. But if you think 100 billion sounds like a lot of money to people, but the turnover on a daily basis on our foreign exchange market is way higher than that. So I don't expect it to have a major impact on our currency or even the cost of capital if we look beyond the immediate reaction over 1 or 2 weeks.
And what
I'm prepared to take a bet on that. I don't think it's going to happen.
I'd love to debate with another economist who I spoke to last night, Iraj Abedian, saying, looking at the history, when countries are rated junk across all the rating agencies, there's a period of serious economic decline, years of recession, and it takes them a long time to come out of that. That's very different to you saying, after a week it'll all be fine.
Yes, so we could have another scenario. So let's say that there is a hit on the currency, and there is that exit. The Reserve Bank can easily buy those bonds and keep things as they were before. It has been done in many countries. So we also have to come up with a proper plan. So I'm saying let's focus on the right things. We need to have a proper plan to grow the economy so the debt to GDP ratio goes lower. We have to have a proper plan to address the debt issue at Eskom, 420 billion rands, and the debt issue at Sunral, which is 50 billion rands. And so if we can have a proper plan to address those things, that is what we should be focusing. We shouldn't be focusing on what the rating agencies are saying.
All right, so that's noise in the background. I was interested what you said to debt, because that is alarming for many people. I think we're 50 heading to 60%.
Yes, we're 55% of GDP, but by global standards, that is not high. In the rich countries, they're sitting at more than 100%, 116% of GDP. In Italy, I think it's about 140. In Japan, it's 250% of GDP. So these numbers are not high, even when you compare with our higher middle income emerging markets.
Haven't you hit the nail on the head saying they're rich though? We are a small company. We are buffeted
and then even
by the dollar, by the global economy. Can we afford?
Yes, but if you compare with our BRICS neighbors, Brazil, India, China, whatever, China is slightly lower, but the other ones are higher than us. They're sitting at about 70%. So what I'm trying to say is that let's not get scared about the debt situation. Let's focus on what is happening in our country. Our economy has not grown for 10 years. So obviously the debt ratio is going to rise and our interest rates are way too high. And it is actually scandalous that the central bank didn't cut interest rates on Thursday. So those are the things that we should be doing. We should have, if I was the president, we should have an emergency meeting to sort out this economic crisis. We should come up with an emergency rate cut. We should come up with a fiscal stimulus. We should come up with some support towards Eskom and with some support towards Sunral, which is basically almost teetering on business rescue.
And we can't talk about the different economic philosophies. Some prefer lower interest rates, which you do clearly. Some
yes, but our interest rates are way higher than they should be. We're in near recession conditions. Our inflation rate is 4% and our prime lending rate is 10.25%. 6.25%, that's a real cost of capital in South Africa, and the economy is growing at less than 1%. So obviously the debt to GDP ratio is going to... Now the reason why that decision made no sense from the central bank is that the three largest central banks in the world, the two largest one, the ECB and the US Fed, they did a policy U-turn in January where they said we're no longer going to increase interest rates. We made a mistake. The global situation's turned, and then the Chinese central bank is going to give more stimulus to the economy, and because global growth is growing. Now in South Africa, what you had is that with the Eskom, the what you call the load shedding, everybody revised the growth forecast down. So now we're heading for another growth of less than 1%. So we'll have the 5th consecutive year of declining GDP per capita. Now, if that doesn't concern our government, that it is time for urgent action, radical measures to get this economy going, I don't know what will.
What are the other infinality low-lying fruits that you see that need to be changed now if we're ever going to start turning this situation around?
We have to change. Okay, so we have to address it. We have to really confront the Eskom issue. I've said...
And do you agree with the unbundling?
No. The unbundling doesn't solve any of the immediate problems that we have at Eskom. For example, the debt situation, the 420 billion rands. Okay, so the unbundling does not solve that issue in the short term, because the unbundling is, if it does go ahead, it's a complex situation that will take 2 or 3 years or 5 years just to write the tender documents for that, whatever's going to happen after that. So it doesn't address the immediate problem. It doesn't address any of the operational problems that we're having at Eskom. So I think we should just focus on capital injection into Eskom to sort out the balance sheet. So the first thing at Eskom is to sort out that balance sheet. And some of the things that I believe, the public investment...
So you're talking about a bigger bailout, something substantial that actually gets
because the thing was, after the budget of the finance minister, some people were saying we're not concerned about the sovereign debt, we're really concerned about Eskom. That's the noise.
Eskom's so crucial.
Yes.
Well, I hope we can chat in future. Thank you very much for your views. That was founding director at the Center for Economic Development and Transformation, Duma Gqubule.